Hi guys, welcome to another honeystocks.com weekend analysis for the 8th of February 2020. I think most of you are probably wondering what's going on with the market at the moment. I have highlighted a few things in the last few weeks just regards the charts that I think everybody needs to be aware of. But I'm getting a lot of emails and a lot of messages asking me if we are going to be getting some big crash correction. And I think what I want to do this week is really just kind of highlight a couple of charts that I think are, super important. I think that's pretty clear. Hopefully, you get a lot of insight. I've got 15, 20 stocks as usual for you guys to kind of look over. I wanted to kind of get this out early today because I'm attending the Scotland v England rugby match today, which for a lot of you that maybe don't know, maybe you guys are from the US, Asia, it's kind of a big deal over here, Scotland v England. I don't know if you've ever seen Braveheart, but that should hopefully give you some kind of idea. But hopefully you get some insight from this. Hopefully there's some sort of value. If you're somebody out there that maybe struggles with technical analysis, with your trading, with consistency, you can maybe stick around for a couple of minutes at the end. There is a little bit that I like to go over just to kind of give you guys an option. But first and foremost, completely free analysis, and hopefully you enjoy it. So I'll dive into the charts. So as always, guys, let's just start off with the very important disclaimer. There's not any investment advice. The information contained within this presentation, it's just opinion, and do with the information as you wish. To give myself just a little bit of credibility, I'm registered with the CMT Association, working my way towards my chartered status, and technical analysis is what I'm widely known for. So a lot of you that have maybe come through, I provide technical insight to the market. I don't get into the fundamentals of companies. I don't get into PE ratios, etc. It's all purely technical. I know there's a lot of you out there this week, especially as I said, from the emails, etc., that are continually finding a lot of difficulty stepping in the brown stuff. Hopefully this helps you in some way, and if you do enjoy it, please do subscribe to our channel. We do try to upload every week, and hopefully it just helps in some way. I'm very well known for being logical. I don't overcomplicate technical analysis. I don't have any fancy technical crossover tools, etc., and hopefully that becomes apparent. So if you are somebody, as I said a second ago, that is struggling a little bit, please do stick around for a couple of minutes at the end, and I'll walk you through what we're offering at the moment. But as always, let's start off with the rotation graph. For those of you that maybe don't understand what the rotation graph is, it's really a tool that we can use to just help us to say, do you know what, this is where the money seems to be flowing into at the moment. And we might want to consider just maybe identifying some of the areas in which we might want to allocate some risk. Now, what we're seeing at the moment is we're seeing a rotation. If we think about these quadrants, we've got this as an improving sector, leading sector, weakening and lagging. We've got biotechs and financials starting to rotate into leading areas. Now, what I would say about XLF at the moment is we are pushing up against resistance dating back to, I think, 2007. So until we get a break in XLF, I wouldn't be looking to allocate risk to that at the moment. Now, for those of you that maybe don't understand what I'm talking about there, I would urge you to go and have a look at the XLF chart, date back to 2007, and just highlight that resistance there. I'm going to be touching on tech in just a second, but we can see that there are some areas here that are weakening. Utilities are weakening a little bit. We've got the Sky ETF software, which didn't have a great week. So these are all areas that you just need to be mindful of. So with that said, I want to start off, before I get into the individual stocks, just with the overall market and why I think you need to be a little bit more cautious at the moment. Now, most of you already understand that I've been preaching about potential market resistance. Yes, we're in a bull market. I'm not bearish in the market. I'm not saying we're about to have a correction or a crash. I'm just not one of those guys. But what I do like to do is just use technical analysis to really tell me whether we want to be aggressive or a little bit more cautious. I think the market's telling us to be a little bit cautious at the moment, and here's why. We're pushing up against technical resistance, but we've got a divergence with RSI momentum. Now, what that is really just telling us is that the market is making new highs, but there is a weakening of momentum, and that just really tells us that there's something brewing under the surface that just tells us, let's not get too aggressive. Okay, I don't want to overcomplicate it too much. I'm sure you can go and spend a couple of hours watching YouTube videos on divergence. It's something to absolutely be aware of. We're seeing the same thing with tech, with the XLK chart. Yes, we're breaking and looking to break out into new highs with tech, but it is just saying that we've got potential divergence here. So until this corrects, until this resolves itself to the upside, I think we do need to be a little bit more defensive, guys, and that's just the technical opinion. You know, I'm often asked what a correction, when we're going to get a correction, and the short answer is nobody knows when a correction is going to happen. But what I have done routinely over the last 3 years is being able to communicate effectively to my client group, my subscribers, when to get defensive ahead of time, because it's getting defensive ahead of time that will save your capital, will save the mental hurdles. And I think this is just a time where we might want to just say, let's get a little bit more defensive in the market, a little bit more cautious. So with that said, individual stocks, individual charts, there's around 15 to 20 of them, and I'll get through them as quickly as possible. Try and let you get on with your weekend. It's you know, Scotland and England rugby today, and I've got places to be and things to do. So okay, Netflix is breaking out of a long-standing, in my opinion, triangle pattern. It's not a bearish move. So if we get market strength continuation next week on Netflix, I think this is one that you might want to consider doing a bit of due diligence. Amazon, obviously super expensive stock. It's not for everyone. Totally get it. But we are breaking out into all-time highs with Amazon on volume. We've obviously had blowout earnings. So the expectation is that this now starts to move. So again, Amazon breaking out, is that bearish for the market? Probably not. But you know, we do have to be mindful of the levels in the S&P 500 and tech and so forth. Starbucks is, in my opinion, in a bit of a triangle pattern now. I think we just simply say we're bullish above this level and bearish. We might want to get a little bit more defensive if you're technically minded. I know there's a lot of you that buy on fundamentals, and I totally understand. It's not the game that I prefer to play. I prefer to use technical analysis with a little bit of fundamentals, but I think we just simply say if you're technically minded, you're bullish above this level, bearish, you might want to just remove the risk of a potential decline there. But Starbucks is obviously Starbucks. I love a Colombian blend as much as the next guy, so absolutely Starbucks is one you can still remain bullish on. Potential breakout incoming with Monster beverage, Monster energy drinks. Again, energy drinks aren't my thing, but the stock price is moving, and you know, I do take the view that I like the price of a stock when it's moving higher. So you know, I'm not going to discriminate just because I don't like Monster energy drinks. So yeah, I think if you're above $70 there, I think, you know, resistance dating back to January 2018 if we get the momentum and volume coming in, that might be an area that you might want to do a bit of due diligence on. Viva Systems was highlighted last week. It did look like we got a little bit of an excursion above the 200 period daily simple moving average, still hovering around there. So again, you're really just waiting for a confirmed breakout on volume here, and I think that probably goes back to test 175. Lululemon, I think above 250. I think what we've seen here is the significant round number barrier holding true at the moment. So again, some breakouts, not all breakouts are created equal, and that's again something that I think is lost on a lot of you that have maybe been buying in at 247, 248. You do need to be mindful of other hurdles in the market as well. It's not just about buying breakouts, unfortunately. I wish it was that easy. So yeah, I think a little bit of patience needed here, and I think above 250 makes a lot of sense. Visa, obviously aligned with the iPay ETF. It's been on an absolute tear over the last 12 months. Long may it continue. Again, I think we're very, very straightforward with our analysis here. I think we just say we're bullish above $200. Below it, you might want to just consider getting a little bit more defensive. Apple, again, I think we are obviously bullish on Apple. It's difficult to be bearish on Apple in the market. It's obviously the biggest company in the world. They've got the biggest cash balance in history. So absolutely, I think this warrants a bit of consideration. We know that with uptrends, any pullbacks, they offer opportunity. Again, not rocket science. Breakout, pull back, $300 round number, and off it goes. So again, just be mindful here. I think we're very close to potentially breaking out again. So I think Apple, if it's not on your radar, it probably needs to be. Okta, again, I'm asked a lot this week about the cloud tech stocks, because I know there's a few of you out there that have had a little bit of a hurdle this week with the next stock that I'm going to talk about, which is Twilio. But I think what we've seen at the moment, and you need to be comfortable with this, if you're moving in on these software tech names, you have to understand that there's a little bit of momentum behind them, and they're kind of like fashion. They're in fashion for a minute, they're out of fashion for a minute. And when they're out of fashion, those things can drop 20-30%, no problems. 10% is perfectly acceptable. That's just the roll of the dice with those types of plays. So I think with Okta, it's obviously holding up pretty well. This has been my chart for a while now. I think we just have to say that we're bullish above this level. I think you need to give it room to breathe if you're in the stock. And I think if you're looking for new entry, I think we're only a few bucks away. And I think if the market has a bit more upside, I think that's a level that you might want to pay close attention to. A breakout into new all-time highs will probably trigger momentum and new money to come in. So I think Okta, absolutely, add that to the watch list. Twilio, I think the one thing, and I did post this chart to social media earlier in the week and just said, look guys, if you're out there earnings, this is a level that you need to pay attention to. As soon as you get a rejection of this level in the day leading up to earnings, I take the view that you can do no more. That this is a logical level of resistance. I know a lot of you will be loving the company, you'll be holding for fundamental reasons, and again, I'm not bashing anybody here. This is just completely unbiased technical analysis. It just becomes a profit target. If you're technically minded, you just say thanks very much, Mr. Twilio, and let's move on and let's reallocate our risk elsewhere. And I think that's kind of what technical analysis does. If you're fundamental in a company and you enjoy the company, you like the company, you believe in the CEO, for example, which is something I hear quite a lot, you can actually use technical analysis to just help you. It's not replacing fundamental analysis. And I think that's the one thing that most of our subscribers and clients like about what we do at honeystocks.com, because we're not saying to you totally discard fundamentals. To the contrary, I embrace it. If somebody wants to give me a fundamental view in a company and it's fundamentally sound, and I'm first to say that fundamentals are not my game. I'm not the most clued up when it comes to fundamentals. I keep an eye on earnings reports. But if one of my clients and subscribers who maybe has a professional background and he comes to me and he says, look, Sam, Twilio fundamentally is incredible, I'll often use that information to find an entry into a fundamentally sound company. I like fundamentally sound companies as well, but this is how technical analysis can be used in conjunction with fundamentals. And I think that's a level that you could say, do you know what, thanks very much, let's wait for earnings, let's wait until we've got more information to make more of an informed decision, and really that's really the way to look at it. But technically at the moment, I think this 200 period simple moving average is obviously a level of interest. I think for any new money to come in, I think you do need to be breaking out above this level here, around 136, 137, and I would fully expect that to go and test 150 again. EHTH, a lot of you would have picked up on my chart that I posted to social media this week, just basically highlighting this. Just it's a level that I think makes a lot of sense. Broke back above it, and I think being bullish on EHTH is incredibly logical. Some of my guys have been in here since $50. It's obviously done very, very well, and it's still moving. So EHTH, if it's not on your radar, it probably should be. AWK, now I did highlight at the start that utilities was potentially weakening. Now the reason I'm highlighting AWK this week to social media for obviously my free analysis is, if we see declines in the broader market, there are certain areas of the market that will traditionally advance a little bit, and utilities is one of those areas, and naturally AWK is a leading performer of that sector. You can also look at SO, Southern Company. Charts look very, very similar. Huge upside move. We know that with a trending stock, pullbacks offer opportunity. So if we do see the declines in the S&P 500 in tech, you can then start to look at things like utilities. So I think with AWK, again, you probably want to add this to your watch list. Now, I think that the first thing to say, I've had a lot of messages this week about Funko, and I totally get it, guys. It's absolutely heartbreaking being in a stock that has a monster decline like that on earnings. You have 100% sympathy. I'm not here to bash anybody or say you should have done this, should have done that. But there's a few of you that have been asking about potential bearish targets on it. For those of you that maybe don't know, with Funko, you could probably go back to my analysis in September. You could hunt through my YouTube videos. I highlighted this as a level that you might want to just get defensive. And we've obviously had a huge decline, but obviously things have ramped up this week. Again, I totally get the distress that many of you will be in, but I've been asked about it. This is probably what I see happening. I think if you want to see new money come into it, I think it's likely to happen above 1150, maybe fill that gap. But what I probably do see happening here is, given that we're massively oversold at the moment, I think we're going to get some upside potential here. I think it's probably going to come back to around $10-11 before falling away again. I think what you'll probably see is a lot of people selling into the strength before we start to fall away again. Again, holding through earnings on non-premium companies is always a bit of a gamble. Um, and naturally, I 100% hope that this turns on its head and obviously starts to advance again. But I've been asked about Funko this week, and that's kind of how I see it. OLED, I think we are in a bit of a triangle pattern here. It's a 25% range. What I would say is that the 200 period simple moving average is obviously a big concern. If you're out there and you're in OLED, I think this is the chart. I think you can be bullish above this level here. I think, below it, not outright bearish, but definitely get defensive if you drop into this level here. It's not good news that we've reached oversold conditions. Those are characteristics of downtrends. Ideally, when you see RSI come down, you want to see it really stay above 40. So the fact that we've obviously reached oversold conditions, that's a concern at the moment. Balzan, again, China, where's China going to go? One of the world's biggest economies is in complete distress at the moment. Obviously, the headlines are obviously of the coronavirus, quarantines. I'm just going to throw this out there. Would there be such a huge deal made with the lockdowns and all the various cities? I mean, they're locking down millions of people. I don't know if they do that on 500-600 deaths or whatever it is that they're reporting. I think there's something bigger going on in China. So if you're out there and you're in Balzan, this level, the market might not care, but I think you can still be bullish on Balzan above this trend line. I think above $30, it's very clearly a key support level. I think if you break below that, it's probably good night Balzan for a while. So definitely be very, very mindful of that level if you're out there. Just with Chinese tech stocks in general, need to be super careful. Square Inc, again, this is one that was obviously talked about within our subscriber community. Breakout target was achieved. Thanks very much, Mr. Square. But we're patiently waiting for a breakout here above 82. My chart has not changed for this. I think if you get a break above 82, I think it probably goes to 100. But I think earnings are probably going to be the key there. Take-Two Interactive, again, need to be super mindful of this level, I think, guys. Those of you that are out there, you're maybe looking at this. I think you can still be bullish on Take-Two. I think this is a level of interest, I think, below this level, and it might well induce a bit more selling pressure. So, absolutely just be mindful of this level. I think you can still be bullish on this, but only just. Snap. Now, this is maybe a little bit different to maybe what you're used to. I did highlight something similar last week with MGM. Now, if we go back to what I was saying just a second ago about with uptrends, we don't want to reach oversold conditions. Those are characteristics of uptrends. With Snap, yes, we've obviously had a pullback, but we haven't reached oversold conditions. So when we get this pullback in RSI to around 40, and we obviously start to get that advance again, a lot of the times that pullback can be bought. Traditionally, it's not the type of trade that I would be looking to take, but it doesn't make it any less valid. So I think with Snapchat, if you're out there, you're maybe looking to allocate new money. I think provided that we stay in provided we don't reach oversold conditions and we stay in this kind of green zone, I think you can continue to remain bullish on Snapchat. Yes, it's a deep pullback, but again, it's obviously had a monster move recently. We've had a little bit of consolidation, so the expectation is that this should hopefully start to advance now. STNE, I think this is a level that you might want to pay attention to. We've obviously had a bit of a pullback. I think above $45 makes a lot of sense there with STNE. Twitter. Now, huge congrats to everybody that held through earnings on this. For those of you that don't know, this was a trade alert that went out to our guys, I think 3 or 4 weeks ago, and it's obviously done very, very well. I think now this is the level to just kind of keep an eye on, is the 200 period simple moving average. I think a break below that level, I would probably just say, you know what, thanks very much, Mr. Twitter, let's move on. But you know, you want to be in a stock for as long as it's paying you, so you need to be very strategic with how you manage your position and how you manage your trade. So absolutely, Twitter, well done everybody. Roku, I think earnings next week is going to be absolutely critical to this. These are the levels that I'm watching with a lot of interest. I think the earnings is going to be the catalyst for a huge move either to the upside or the downside. The reason I say it's likely to be a huge move is because it's a massive momentum stock. So, you know, absolutely just bear that in mind. And yeah, I think we've seen with stocks that are maybe non-premium that they can move an extraordinary amount, gap down overnight, and before you know it, you're taking a horrific loss. You know, those of you out there that like to take lotto options plays, you know, it's valid, but just make sure that it's risk defined and that you're not risking too much of your overall capital. So guys, that's really the weekend analysis for you all. Hopefully you've all got something from it. Please do subscribe to our channel. But if you are somebody out there that maybe does struggle a little bit more than others, or you know, maybe you don't understand technical analysis, maybe you want to learn technical analysis, we are very, very close to shutting our doors, unfortunately. We're fast approaching our membership limit, but you know, it's still there at the moment. Now, for those of you that maybe want to align yourself with a trading group, a community, what I would say is that the group that I've built over the last couple of years, it's not your typical trading group. And the reason I say that is because it's not a group that, you know, attracts day traders. I'm very much anti-day trading. I couldn't think of anything worse than moving in and out in 5-minute and 30-minute charts. That is not the game that I play. And what that has done is it's attracted a lot of accredited investors, traders, and when everybody comes together and aligns with the same approach, especially when everybody's, you know, really well educated and, you know, is pulling in the same direction, you know, beautiful things start to happen. And that's what the Honey Stocks trading community is all about. Everybody pulls in the same direction. We all pretty much align with the same style. And when you have that, you know, it just makes the market a lot easier. So I'll walk you through a couple of things, and you can obviously make a more informed decision. But you know, you get 1 year access to our trading community. But I think the one thing that absolutely everybody sees incredible value in is with the offer that we're doing at the moment. Any sign-ups are receiving full access to our technical analysis program. We do charge a lot of money for that. As soon as that 200 membership limit is reached, as I said, the honeystocks.com doors close. It will not be open to new members. I obviously have a quality over quantity approach, and I need to be able to support everybody, and I cannot do that if there are thousands and thousands of people within our group. I don't have any wish to go down that route. So if you're out there and you've been thinking about joining for a while, it's it's out there. So if you don't know who I am, I'm Sam, as I said before, working my way towards my chartered status with the CMT Association, which is obviously a huge deal. Most of you probably know my website, very popular blog, obviously analysis videos that everybody knows and loves. But the really cool thing about what I do at honeystocks.com is I log every single trade idea on our website. I don't know anybody else that does this. I would encourage you, if you are looking, or maybe you subscribe to other charting platforms, etc. If there are trade ideas, ask them to provide a list of their trade ideas. I publish them all on my website. You can see the date that I've posted the chart. You can see the stock. You can see the price that I've recommended it at and what that stock has then gone on to do. And it's helped many traders become seven-figure traders now through options. Obviously, those that trade stock have higher, capital balances. But if you're out there and you're trying to grow a small account of a few $100, I cannot help you, unfortunately, because obviously the stocks that I like to trade, they're not penny stocks. They're not stocks that you're going to get in for less than $5-10. We're choosing small to large cap stocks. Typically, anything from $20 and above is really what we're looking at there. So please go and check that out, and it will give you a better informed view on exactly what it is that I do. And this is what a trade alert looks like. This is the trade alert that we sent out for Twitter. So yeah, it's very clear, and that this is done routinely. This is obviously ENPH. This is up at $38, $39 now. ABV, I was talking about support charting a second ago. This is a chart that I actually sent out on Friday to our guys and just said, look, this is a chart. We've got a good earnings report above $90, makes a lot of sense. I think we got as high as 93, 94. It's off and running. So again, that's really what I do, guys. ENPH, again, support chart. Many of our subscribers have been in this one since $17, $18, and it's obviously paying incredibly well. It's I don't have the standard trading group, guys. I don't have a WhatsApp group. I'm not asking you to move in on a stock on 5 minutes notice. I've got my app. I've got very structured, methodical way of doing absolutely everything in life, and that holds true for our community as well. So if you're trying to fit trading or investing around a career or a business, if you're looking to move away from day trading, maybe you just want better consistency, maybe you want to learn for yourself and not just follow others, I think our program would be massive for you, just as it has been for everyone else. Because I know what it's like, trading, learning from YouTube and learning from those losses. It can be soul destroying sometimes, and I know the process can take a couple of years. So if you're looking to accelerate your learning, you want to be part of a really cool group that very open about what we do, the style, etc., and maybe you're open to learning a new way, feel free to go and check us out. But from the bottom of my heart, have a really good weekend, guys. I'm away to enjoy the Scotland-England rugby match today, and maybe we'll speak to you soon. Thanks as always.